Seeing as the times are changing and electric cars are the future of the automobile industry, Volvo Australia has decided to speed up its conversion to produce only electric cars by 2026. This is a gamble, but why is it worth the risk? Also, due to a decrease in the operating profit of Volvo, the outlook for Volvo cars is deteriorating. Watch till the end for details on these. Outlook of Volvo cars deteriorating as profit declines. As competitors in Europe reported excellent earnings, Volvo cars' operational profit for the third quarter decreased by nearly a third, and Moody's Investor Service modified its prognosis for a rating change from positive to a less favorable stable. According to a forecast by Moody's, profitability will decline over the next 1.5 years as sales drop. UBS, an investment bank, projects that free cash flow will not be positive until 2025. Volvo announced third quarter operating profit down to $197 million from $310 million a year ago. Volvo owns roughly half of electric vehicle manufacturer Polestar and is majority owned by China's Zhejiang Geely Holding Group. A year or so ago, a portion of Volvo was floated on the stock exchange. Mercedes and BMW warned investors that 2023 would be a difficult year for their bottom lines, after reporting good profits for the time. Volvo stated that its sales were anticipated to be somewhat lower in 2022, following an earlier prediction that they would increase, but it provided no information regarding profits. When Volvo revealed its EX90 SUV, the company's premier electric car that will go on sale in the US in 2024, it did garner some nice press earlier this month. The Volvo facility in Ridgeville, South Carolina, will produce the EX90. Moody's was more focused on the present challenges. According to Moody's analyst Matthias Heck in the report, a rating upgrade has become unlikely over the next 12 to 18 months due to the more difficult environment for the automotive sector, a weakening profitability brought on by high raw material costs, and a sales contraction brought on by a delay in car deliveries as a result of supply chain restrictions. Heck claimed that Volvo benefits from having strong liquidity and moderate leverage, and he anticipates medium-term gains in profit margins. Heck stated that even if the macro situation in 2023 would be difficult, there will be help from the multiple new model introductions and the gradual winding down of the supply chain-related delayed automobile deliveries. By 2025, Volvo hopes to increase profitability to a range of 8 to 10% earnings before interest and tax, up from an average of around 6% between 2016 and 2019. Although Moody's anticipates some progress, it will probably be muted given the current circumstances. According to the Moody's analysis, the forecast of margin improvement is driven by new model introductions like the EX90, efficiency measures and scale impacts, especially at Polestar, as well as price rises. The Mercedes EQE, Tesla Model X, and BMW iX1 are competitors of the EX90. The engineering of the EX90 is heavily influenced by the previously debuted Polestar 3. Compared to the last year's loss of $292 million, Polestar's operating loss was lower in the third quarter, coming in at $196 million. The majority of mid-decade targets will be challenging to achieve, according to a report by UBS, which has a sell rating on Volvo. The report stated that regarding volume, they are wary due to the threat of demand erasure in 2023 and the escalating rivalry in Volvo's core markets. In addition, Volvo has a modest market share in the luxury battery electric car segment, which is fragmented. Up to 2025, they do not anticipate positive free cash flow. They believe the present valuation premium relative to peers is unjustified. Volvo's share price has been on an up and down roller coaster, primarily downhill, falling close to 43 crowns in late October, following an initial leap on the stock market after the initial float to a peak of just over 90 crowns in January. Recently, it spiked to just about 60 crowns before dropping once again. Why is Volvo's all-electric gamble worth the risk? In the auto industry, timing is everything. A completely new model can take years to develop, but since the market is constantly changing, it is important to be aware of future trends. This is why auto industry executives are paid so much. Ask Holden, which invested $1 billion in the VE Commodore, only to discover that customers preferred SUVs after it was finished. Volvo Australia's intention to hasten the transition to an entirely electric lineup by 2026 would first be perceived as a significant risk, considering that only 2.6% of all cars sold in the first 10 months of 2022 were electric. The internal combustion engine has a long shelf life in the Australian auto industry. However, Volvo isn't taking a significant risk with this decision. In fact, we'd say it's the best one the Swedish company can make in our market. Why? Because despite having a lengthy history and a solid reputation for design and safety, Volvo is having a hard time competing in the local luxury sales market. Mercedes-Benz and BMW each sold more than 20,000 new vehicles in 2021, compared to just over 9,000 new cars sold by Volvo. Audi and Lexus outsold it as well, but it did outperform brands like Land Rover, Porsche, and Jaguar. Therefore, the company is finally left in an odd position, far ahead of the smallest luxury firms yet behind the leaders. Tesla, an upstart American brand that has revolutionized the whole automotive sector, is the crucial brand that demonstrates why Volvo is making the right decision. decision. We can now see the entire breadth of the brand's presence in Australia since Tesla has started reporting its sales information through the Federal Chamber of Automotive Industries monthly reports. Despite solely depending on Models 3 and Y, Tesla has sold 15,132 cars as of October this year, which is much higher than Volvo at 8,852. This puts Tesla on track to pass Audi, Lexus, and Volvo in 2022 to become the third most popular luxury brand in sales, behind Mercedes-Benz and BMW. This shows that there is a sizable luxury market for electric automobiles. Therefore, Volvo Australia has made the decision to move up by 2 years the brand's global goal of going completely electric by 2028. It will give the company a new image, after being long associated with being boxy but safe, despite becoming one of the most fashionable automakers in the last 10 years with a distinctively Scandinavian aesthetic that permeates its whole lineup. Accelerating is necessary since legislation in Europe and other regions of the world requires other brands to transition away from internal combustion engines in favor of electricity by 2030. Volvo Australia is being proactive by getting a head start on its rivals, particularly Mercedes-Benz, BMW, and Audi. This strategy could offer them an advantage by the end of this decade. Within the next 4 years, this move would effectively position the brand as Swedish Tesla, enabling it to make a new pitch to buyers who have traditionally preferred the major German brands or, more lately, Tesla. According to Stephen Connor, managing director of Volvo Australia, there was no benefit for the company in waiting until 2028 or 2030, and he explained every incentive to move forward with this electric future as soon as feasible. He stated that if they wait until 2030, they will lose the electric market share to their rivals, according to Mr. Connor. He said that if one looks at the electric space, the market will be very crowded by that time. Mr. Connor stated that their goal is to become the first Australian brand to totally transition from a combustion car maker to an electric automaker. He then said that their lineup wouldn't have any gaps, and they will concentrate on their core models, but there will be new all-electric versions as well. He said that they would do it right away if these models were already available and that their customers are prepared for the technology. In response to a question regarding the ongoing supply problems affecting not only Volvo, but also other automakers globally, Mr. Connor expressed his optimism that the brand would have sufficient supply of its all-electric cars in the upcoming years. The C40 Recharge and the XC40 Recharge EVs, which are now on the market and receiving favorable reviews in Australia, as well as the recently announced EX90, which will shortly take the place of the XC90, are promising early signals for the brand. There are rumors of future range expansions, and the XC60 will apparently be the last combustion-powered model to be updated. A new SUV to fit between the XC60 and EX90, as well as 2 electrified wagon-style cars. Volvo will probably have the best chance of growing its sales in Australia if it can introduce a new line of secure and fashionable Swedish electric vehicles. While there is no assurance that this modification will make it a direct competitor to brands like Mercedes, BMW, and Tesla, it does give Volvo its greatest chance to eventually go up against them. Since timing is important in the car business, this choice, though undoubtedly risky, has the potential to drastically alter Volvo's situation in Australia for decades to come. What is your opinion on Volvo Australia's decision to accelerate its conversion to fully electric car production? Also, what topics would you like us to feature in the future? Let us know through the comment section. Please give the video a thumbs up and subscribe to the channel. Thank you for watching.